The Pick n Pay Group released their annual results today for the 53 weeks ended the 2nd of March 2025. The recently embattled retailer reported a substantial reduction in their losses, seemingly on an improved path to viability. Their loss before tax and capital items line item came in at 237 million rand. That's compared with a 1.4 billion rand loss in the year prior. That's an 83% improvement, even though it is still a loss. In terms of operational results, the retailer posted an increase in turnover of 5.6% at 118.6 billion rand, while their headline loss per share narrowed to 61.54 cents compared to a headline loss of 172.21 cents in the year prior. Well, to expand on these numbers for us, I'm joined by Sean Summers. He's the CEO at the Pick n Pay Group. Thank you very much, Mr. Summers, for joining us. So the improvement in narrowing the losses the group was incurring in recent years is really quite remarkable. We know that you embarked on a number of capital raising exercises to help fill some of the gaps. Just tell us about those processes, how successful they were, and how you utilized the funds raised, and where you are in terms of your current debt levels.
Well, compared to a year ago this time, we had a significant debt in the company, and through the rights offer and the listing of Boxer, we unlocked capital in that regard. And we are sitting in a situation today that we drew our debt down by over 11.5 billion. And today we're sitting at 4.5 billion cash on the balance sheet. We still hold about 65% of Boxer. So there was a significant value unlock for the shareholders in the listing of Boxer. So as a company today, compared to a year ago, we are sitting in a profoundly different situation, which allows us now to continue to invest as we turn the core Pick n Pay retail trading around.
So in terms of your operational performance, you note having achieved a trading profit of 1.8 billion rand. Just take us through the performance of the various units. And I see that Boxer continues to be a significant contributor, growing sales in double digits.
Correct. Boxer remains an extraordinary enterprise and newly listed. They had their maiden results that were released 2 weeks ago. So Marek and David went around the country presenting their results, and a really great performance, and obviously a very good strategic hold for us in Pick n Pay. And we see Boxer very, very much as a part of the company going forward. And in essence, no different to the way that we approached the market in the past. Just that we've listed Boxer, but it's still a key part of the organization.
Yeah. So what are you planning to do with the 40 outlets that you've identified as loss-making?
Well, in the year past, we closed 40 stores and dealt with those. Those weren't all closed. Some went to franchise, some went to Boxer, and then some closed. So as I say, 40 stores closed. Sorry, in total we were 40 stores closed last year. We identify that we've maybe got another 30 to go. But you know, this is a positive process in and of itself. There's not a retailer in the world who doesn't look at their list of stores and have some stores that are non-contributory. So at the end of this process, it's in fact great, because we will then have a real estate, which is the real estate that we want. Ours is a flight to quality of stores and not quantity of stores. It's just a simple truth that Pick n Pay certainly in my time will never be the biggest retailer in South Africa again, but our goal is to put ourselves back as the best retailer in South Africa. And that is a journey that we have embarked on, and we are starting to make significant strides.
Yeah. So you're clearly on a good wicket in terms of improvement momentum, but you're still in loss-making territory. So what's the strategy henceforth to build what you've described as better retail muscle? And I see that you're looking to get the business breaking even by financial year 2028.
Correct. And one of the things we are not doing is going for the hackneyed quick wins. Everybody says when you turn an organization like this around, you have to focus on quick wins. But usually quick wins come with a cost in the short and the medium term. So what we are doing, everything that we're doing is done on a considered basis as to whether it's really appropriate. One needs to think of the unintended consequences of everything that you do. And we are investing ahead of the recovery. You know, the company cannot recover and then have money to invest. We have to have the guts and the belief to invest now, which is what we are doing. And that's both in terms of people, what we're doing in terms of our marketing campaigns, sponsoring the Springboks, getting all of the positive energy and trajectory back in and driving the momentum in the company. So from our investor group, I've had absolutely nothing other than extraordinary support and saying that they're not really concerned about the fact that it's gone out by maybe 12 months. And you know, my original prediction when I came back on the 18th of October 2023 was two things. One, that this would be a multi-year process, and that two, things would get worse before they got better. And I think where we now find ourselves very encouragingly is that we're at the bottom of that cycle, and from here on in it's improvement. And the multi-year journey, I indicated about 3 years when I first returned, but that was just really a gut instinct more than anything else. Shane Watkins from All Weather Capital said to me, Sean, why are you pressurizing yourself? You need 5 years. So as I said to Shane this morning, we'll settle on 4, somewhere in between.
Very quickly, Mr. Summers, the fact that we're not having that VAT increase, how much of a difference do you think that will make to retailers like yourself?
Sean, not Mr. Summers, Sean. I think, first of all, saved us a lot of elbow grease that it would have cost us to do that. You know, I was always a bit perplexed at the 0.5% because, you know, is the juice really worth the squeeze at the end of the day? So it just certainly saved us a lot on the administration front. And I think it also very, very importantly helps the consumers because we know we're in a constrained market. We know that the market is under a lot of pressure. Fortunately, inflation is down, food inflation is down well, which bodes well for the market, but the market remains constrained.
Indeed. Well, thank you very much, Sean, for giving us your time and your insights on the company results. That was Sean Summers. He's the CEO of the Pick n Pay Group.